A very good afternoon to you. I can't believe it's already the 7th of December. It feels as though the year has raced on by, and what an understatement it would be for me to say what a year it has been. I guess, first of all, welcome to the third and indeed final of our Banks 45 webinar series. I'm delighted for those of you who have managed to take part in the first couple that they appear to have been very successfully received, and certainly we felt very, very keen to make sure that we were able to finalise the last one by the end of the year. It is again virtual. That's certainly a facet of the world in which we operate nowadays. But equally, I hope that will be very appealing to those dialing in from the US, as well as Asia, and indeed those who are unable to make it, who will be watching this pre-recorded episode as well. So I guess a number of the themes today were touched on during the recent Cybos conference, and certainly bilaterally with our clients. They're key themes that have certainly lived with us throughout 2021, but will continue to do so given the backdrop that we face, certainly in the current environment, and very likely going forward with a number of trends that were influenced both by the environment that we're in, but also a trajectory that we were largely seeing for some period of time that have been very much accelerated by the particular events that we've seen over the last couple of years. We've got some really super panelists today. As mentioned earlier, we're very, very keen to be taking your questions as well as listening to the debate that's been had. And I will be moderating that session, so I'm very keen to see some interesting and challenging questions from all of you today. So without further ado, let me hand over to our first panelist, Mirka. If you could unmute and introduce yourself.
Hi, good morning, good afternoon, and whichever other part of the day you are currently in. I'm Mirka Skripczak. I'm Head of Working Capital and Trade Product for NatWest.
Today we want to talk... I'm sorry, I should have jumped in there and said, Terry, perhaps you'd also like to introduce yourself briefly, and Tim as well, and then we'll revert back to Mirka to kick off.
Sure, thanks a lot, James. Hi, my name's Terry Hubert. I am part of the strategy team at Swift. So the platform that you'll be aware of provides messaging and standards to the global community, and I'm supporting on the trade side today. So thank you very much. Over to Tim, I guess.
Hi, my name is Tim Tor. I'm the Head of Digital Technology at the Commercial Bank. So lovely to talk to you, and looking forward to some questions today. I'm handing back to Mirka. Thank you.
Well, fabulous. So trade, big question, big challenge to all of us. What have we seen in the last years? What level of acceleration we have seen within trade, but also what are the new themes that are coming into trade that we see in the banking industry as a whole? So if we think about how what characterizes trade nowadays, it is still quite manual. It is still quite paper driven. There is increased use of technology. But I think we all have to agree that the technology is not really taking the pace that is required when we think about the speed in which the technology is available. So we start seeing a clear differentiator between our customers' demands, between our customers' expectations of the experience they consume from us, as well as the fact that they are not able to move as quickly as they would like to. However, this pandemic has accelerated a lot. And today's episode is talking a lot about how the technology enables new solutions. We as NatWest, we've been working very closely with Swift as well in terms of addressing challenges during the pandemic. And I think that the thing that we need to really consider into the future is how do we avoid the rubber band syndrome? How do we take that acceleration going forward? How are we going to make sure that those new technology solutions that we did utilize during the pandemic become a longevity, become the status quo? So that's one interesting idea that we're seeing. The other aspect is all things relating to ESG, which again is going to most likely and for sure accelerate solutions within trade. We all received the Dear CEO letter as well. So it's not just ESG, it's about the provenance of goods. It's understanding all the various aspects of trade transaction. And we can't get there without technology. We can't have the answers at the tip of our fingers without technology. So from that aspect, we need to think about initiatives that are being built across the industry and start building common denominators. I think from a bank's perspective, the greatest challenge we also see is around what is the common denominator when you think about big topics like ESG and sustainability. Because there is so many various agencies, providers, whether they're technologies or whether they are going further along the line of trying to rate corporates in terms of, for example, the carbon footprint. However, if we don't have a common denominator, then between ourselves, how do we give a reliable benchmarks to our customers? So we as NatWest are pretty much involved with the new consortium that has been formed by Coriolis. We definitely want to make sure we build a bank-wide, not for NatWest, but with other parties, to start driving the common denominators, which is linked to the UN Common Sustainability Goals, for example. So I paused there for a second. I'm just going to check if there are any specific questions relating to trade. Would you want to take them now, or would you want to wait till other panelists had a chance to talk?
Nothing so far, Mirka, so do carry on and we'll revert back to Q&A at the end of the session.
No problem. Okay, so when we think about big topics such as ESG, we started seeing this challenge of lack of common denominator. And I think consortium that is being mobilized with banks such as HSBC, Lloyds, Barclays, JP Morgan, Credit Suisse, ourselves, and I think there are a few others, will allow us to drive this common platform of assessing trade transactions against those common sustainability goals. The other area that I would like to mention as well, in terms of developments that we need to work together, is better share of knowledge in terms of those new technologies available to us. You guys know we're passionate about blockchain, but I'm not necessarily going to go that route today. The big world of APIs, which we will be discussing, but the use of AI in trade and really leveraging knowledge between ourselves around providers in this space. What we recently encountered that different types of AI providers offer totally different solutions. But a lot of providers who are knocking onto our doors, as I'm sure they're on yours, is really thinking about AI that works with structured data. And in trade, we do see the challenge of unstructured data. So sharing the knowledge between us to who provides the best solutions for those type of scenarios, I think is something that we definitely want to pursue. We started engaging with a number of other banks in the market to start sharing the ideas. I think it's tricky because we are inundated with various technology providers. So whilst we want to do digitization of trade, which is absolutely necessary, we can't do it alone. And I think that is one aspect that we all probably are considering individually in our organizations, that without common set of principles, without ability to reuse solutions between ourselves, we can't do trade efficiently, we can't digitize it efficiently because of the number of parties in a trade transaction. So we start seeing some really positive movements towards standardization. I'm sure you guys all seen it under the ICC umbrella. And it's for the first time, it's spoken as something that can also be pushed towards changing legislation. We are absolutely seeing the lobbying starting across the world and pushes us further towards electronic bills of lading, for example. So I think the opportunity to digitize trade is huge. I think our biggest concern is that legislature is not stepping in the same, it's not moving at the same pace as we are. But again, industry initiatives across the board are a great testament to all of us. So with that, I would like to pass on to Terry, I believe.
Okay, thank you so much, Mirka. And, what Mirka has just been talking about is saying, which I think we're clearly seeing, are thoughts that are reflected throughout the industry. And certainly, from my perspective, I've been involved in trade finance for over 30 years now. And probably the last 5 years have seen the greatest change and momentum in the business than I'd seen in the previous 25. When you look at what all the banks and communities are trying to do. And from my perspective, I think that's very much driven by the digitisation agenda. Because what is it that digitisation gives us? Well, it's all about the data at the end of the day. And it's the data that supports all of the challenges that we're facing today. When you think about the Dear CEO letter, when you think about challenges from OFAC around maritime compliance, the ESG agenda, the way that we can effectively manage all of that is by getting access to data, because the data supports the automation of a whole host of processes which help us in providing significant operational efficiencies across all parties in the transaction, thereby reducing costs and increasing profitability. But all parties are going to be benefiting from a whole host of other topics. There's going to be data analytics, there's going to be forecasting, shipment tracking, risk mitigation, fraud detection. We can be able to expedite settlements more quickly for our clients and an improved customer service. So all of these things are really going to be driven by that data agenda. And, when we think about trade, depending on who you're speaking to, I think people tend to bucket trade into different areas. And we're not just talking about traditional trade. This isn't just LCs and guarantees and collections. This is across the whole infrastructure. This is about the end-to-end process of trade and supply chain finance programs. It's across the entire physical and financial supply chains, because it enables us to connect those much more effectively so that we can actually manage the full transaction cycle end-to-end and manage the risks and the benefits accordingly for that. Now, there's no doubt that the traditional trade products, particularly the LCs and collections and guarantees, are very paper-heavy, manually intensive processes at the moment. And that's been something which banks and corporates around the world have been trying to solve in different numbers of ways. But I think the technology is now starting to get there, where we're going to start seeing real game changers in the way that we can do this. Now, when you think about the technology space, Mirka reflected upon blockchain, and we're seeing lots of services from blockchain, cloud, platforms as a service, software as a service, and these are leveraging other components such as optical character recognition, artificial intelligence, machine learning. But a lot of these things you find is driven again by scale, and the only way to get scale is data. So it's a self-fulfilling prophecy that as we do more data, then the effectiveness of these technologies will become greater and greater for us. So I think it's a real challenge and something that the entire community should look to embrace. And I think Mirka also raised a really good point about collaboration and learning. That there is a huge benefit for all the relevant parties in the trade ecosystem to be working together to find the right solutions. Because if not, what we'll do is we'll end up with a process, lots of random processes that are not interconnected, where there's no standards in place. And obviously standards is actually a key component of this, because that drives the ability for interoperability and for leveraging this entire ecosystem of new technologies. And of course, when you think about, I'm at Swift, and Swift has been around for over 40 years and has been providing messaging and standards to the entire payments, trade and securities business for a long time. And actually, Swift is a good way to look at standards, because you look at the benefits it's done. So when I started out in trade, I said a long time ago, it was manually typed letters of credit with blue and red and green ink. It was telexes, tested telexes, microfiches. But when Swift came along, Swift changed that, because what it did is it gave us a support structure so that we could know who's sending us the transaction, authenticating that transaction, knowing the type of product or instruction it was, and then having clearly defined data elements in a standardized way so that there was no ambiguity of the data. And so what we have to do now is we take that to the next step. So it's not just on the initiation of these transactions. If we can apply standards across the board for the entire environment, then I think we're on to a winner, and we'll see the true benefit of digitisation across this space. I'll stop there for now. We'll be taking questions at the end. And now I think I'll just like to pass over to Tim to talk about his aspects on digitisation and APIs.
Perfect. Thank you, Terry. And operator, could we have the slides, please? Right. Okay. I want to start with open banking, and I'm going to shift the topic slightly away from trade at the moment, but there are parallels around what has happened in the payment space, particularly in the UK, and where the future of trade may end up. So looking at open banking first, so this quote comes from the Open Banking Impact Report, that 7.5% to 8.5% of digitally enabled UK consumers are active users of at least one open banking service. So that's quite a fundamental growth if you consider that open banking was formally introduced in 2018. Yes, there is plenty of room for growth over the next few years, but it is becoming a frequently used channel where the UK's fintech community is able to consume and communicate with customers through authorized and authenticated journeys. So it's quite an interesting movement how things have developed over the last few years. Now let's start looking at what APIs we provide within the NatWest group. So if we could have the next slide, please. So within NatWest, we like to talk about the bank of APIs because open banking is a foundational service that we provide across all of our brands, but it is something that is there in the market across numerous banks. It's free of charge for our customers to use, but we actually also want to make sure that we build products and services that are expanding on that, so premium API services that are tailored for specific use cases. And I'm pleased to say that there are over 750,000 customers in the NatWest group that are using those propositions. And we have built the Bank of APIs as an ecosystem where we help our customers to automate, accelerate, and innovate the solutions that are fit for purpose. And we'll talk about a few of them in a moment. If you would like to know more information, I would encourage you to visit bankofapis.com. It's the website where you can browse through our API libraries, you can explore our documentation and understand the specific use cases of the APIs. We will continue to build out that ecosystem because we really have that vision of building a bank that's fully API enabled, and more products and services will be added over time. So on the next slide, let's talk about the specifics of things to consider before embarking on the API journey. And I've spent quite a lot of time with our clients over the last 3 years to kind of review, okay, what can APIs actually do? Because obviously we get all excited in the banking industry about new technology, but it's really about what customer journeys can you change? And the key question that I often start with is what business processes, so your business processes, not ours, would benefit from real-time data. This can be inward data, outward data, and think big. It could be data within your organizations, or it could be external data, either bank to consumer or bank to bank. But it's really around, okay, what are the pain points that you're trying to resolve with your API business case? Once you understand what you're targeting, it's really about, can you build that capability in-house? So can you go to your engineering and technology teams to say, look, I want to build this type of data with this particular business case? Or do you need to go and buy that type of support, or perhaps partner with someone else to look to build that? I talked about the business case. Ultimately, it's a very simple one. What's the cost benefit? So think about that business process. What could it do to unlock value? Could you serve your customers quicker or your stakeholders as part of that process? So really think of it as a financial opportunity to either delight your customers or to reduce cost within your own organization. Then specifically, open banking, does that work for you? So open banking does a number of things. The biggest use case is the sharing of transaction information. So intraday reporting, you can do balance reporting. So this is traditional kind of reconciliation task can be consumed through open banking. Or are your needs more complex? So are you looking for premium APIs? And with those premium APIs, which ones are available in the market? And who can provide it? So it's a bit of scouting where you have to understand what options are available in the market and who you want to partner with. Then lastly, how mature is that solution? We talked already about Swift today. Swift has been around for decades and have done a fantastic job in creating a global ecosystem for bank-to-bank and bank-to-consumer and corporate interactions. But obviously, that has matured over time. APIs is fairly new. Open banking is now 3 years old. There is still quite a lot of discussions around standardization of API technology, the messaging languages, and I see, especially with the rollout of the new payments architecture in the UK, ISO 20022 taking a front seat with a lot of those conversations. But it's important to look at those alternatives around, okay, do I use what is there with the maturity of all the suppliers in the market that can provide Swift capability, or do I have a vision to get that hooked in via API journeys? Could I have the next slide, please? Right, I just want to talk you through a few examples because it's always a bit abstract when we talk about technology, but let's have a look at some of the propositions that we have created in the bank. And this is not a sales journey. It's really trying to bring to life some of the products that we have in our Bank of APIs ecosystem. So the first one is Pay It. Pay It is a solution that provides an alternative for check and bank transfers. And it's really a easy solution for our customers to create propositions that allow them to send money without needing the bank account details of the underlying customer. So think of, for instance, an insurance company that wants to pay out a claim. So a customer, in this case, Laura, would contact that insurance company saying, I would like to claim for £1,000. They discuss that case and they agree that she is entitled for that refund. Now, at that moment, we can help that insurance company to generate an email. It could be a text message. It could also be a digital journey on screen where Laura is being navigated through that. But it doesn't really matter what the distribution channel is. She knows that a message is coming and she can therefore claim the funds. Once that email arrives in this example, then she clicks on that and she can claim her funds. She will then be directed through open banking to log into their banking application, which could be with NatWest, could be with Lloyds or any of the other participants in open banking. And by logging in, she will authenticate herself and provide consent to share her details through the open banking payments rails. The good news is that the insurer won't have those details, so she doesn't have to worry about sharing details with a third party. It all kind of goes through payment rails. And we think that's a really neat solution to bring those kind of API journeys to life and really delight our customers. Now, you see some of the awards that we've won with this proposition, and we're very proud that it's well received by the market. Right, let's move to the next slide and talk about another example. So we talked about kind of the Swift network. What we've seen with APIs is that there's also a large demand for bank-to-bank type APIs. So we have an Indirect Access API, which is allowing our customers access to payment schemes via our Bankline Direct channel proposition. But basically, we have payments that support payment service providers and banks and building societies in the UK to use these APIs to make and receive real-time payments. And that has been a very successful journey for us. We now process about £1 billion a month through these APIs, and they are, again, about 2.5 years old. So we're starting to see some real momentum growing behind this, and the number of transactions going through these pipes are now larger than what we see in open banking for the NatWest Group. So it's taking off, it's growing, and it's steadily becoming a really important channel for us in the bank. Now, from my experience, the most challenging elements have been work with clients and organizations to get them ready to benefit from the API technology. So often I've worked with clients that were still on legacy technology, dealing with batch processes, and really had to invest in getting their systems ready before they could start to consume some of these APIs. So there's often a layer of technology and also operational and risk management layers that need to be taken into account to embark on these journeys. Often these organizations weren't yet operating 24/7, so it does require also a change in processes and risk appetite. So it's not just a technology play. That's the key thing I want to say on that. So those are two examples of what we've done in the payments and reconciliation space to help our customers digitize with their propositions. As I said before, I can see strong parallels with the work that's happening in the trade world. There's a real need to digitize that. Data standardization we talked about is important, and then also embarking on that journey to identify the key elements that could benefit either from an API journey or possibly more standardization across the SWIFT network. So with that, I'll close my presentation and we can go to questions and answers.
Tim, thank you very much indeed, and also thank you very much to Terry and Mirka as well. A pretty broad range of topics, as I'm sure you will all agree. While you guys have been talking, some really fantastic questions have come through actually, so thank you very much indeed to the audience for putting some really interesting and some really quite challenging questions here, which again span right across trade, API and open banking as well. I guess, Tim, I'll stick with you if I may, just to sort of keep the flow of API. The question here for you, is it possible to maintain our existing connection for payments and also use your new Bankline Direct Indirect Access API?
That's a great question, and thank you for submitting that one. The answer is it depends. So what we've done is we've built it to coexist with a number of our channels. So if you have, let's say, batch capability, you can run the APIs in parallel. However, there are some limitations. So for instance, if I take, for example, inward faster payments, if you have a SWIFT FIN connection or a API connection there, you have to choose which channel you use for receiving some of those messages. And that's because we've kind of built the extension of the scheme network and we pass those messages straight on through to your preferred channel. So it depends a little bit. We can dual run in a number of cases. It's probably best to discuss that through the relationship managers and we can have a conversation about your specific situation. But there are some options there.
Thank you, Tim. And I'm sorry to keep you spotlighted, but probably useful that we've got the flow here. Are there any plans to make these APIs available to your agency bank customers? I.e., could we enable our customers to use Pay It?
In short, yes. So we are exploring those opportunities, right? Because with all of these solutions, it's great to have the technology available, but it's about, okay, how can we create reuse across a bigger customer base to make sure that it's beneficial for us from an economies of scale point of view, and we can continue to invest in building out those ecosystems. So yes, we are exploring extending those through our agency networks. And if you're interested, again, please discuss with the RM community. We'll be more than happy to take you on that journey.
Thank you, Tim. I'll give you a brief rest and an ability to grab a sip of water just while I move on to Terry and Mirka. So we'll switch gear back into trade, if you will, albeit as Tim rightly mentioned earlier, there are a lot of parallels, particularly with regard to technology. Although, Terry, I'm certainly old enough to remember the tested telex route as well. It's scary how much we're already onto API, blockchain, open banking, and so on with regard to trade. But clearly, some heritage processes remain that are a struggle. Question here from an old friend of mine, Reece Sinden. Reece, great to at least know you're on the line here. I know I can't see you, but thank you for joining. Terry, this is a question for you from Reece, which is, what do you see as the greatest barrier to driving digitization of trade documentation?
Okay, well, look, it's an interesting question, and I think you can look at it from two different angles. So first of all, there's the actual digitisation of trade documents in their singularity. So, maybe banks today are receiving, under a typical letter of credit, they'll receive 10 or 20 documents, and they want to digitise that to improve their operational efficiencies and to improve their sanction screening parts. So there are definitely technologies out there today that are leveraging OCR and machine learning to extract that data and to present it in a meaningful way. But I think the technology is really performing great, but it's the perfection of that data is very much reliant on scale, because machine learning is about scale, and it's not just about taking 10 documents and analysing them. Machine learning is about seeing thousands or tens of thousands or hundreds of thousands of documents so that it can learn and interpret the way different data is structured. Merker referred to the unstructured data piece that we see in trade documents, and it's true. Whilst certain documents are nicely established and the text is written as if it was in a book, you'll see packing lists and invoices that are in blocks of information, and being able to identify and translate that in a meaningful way is very much driven by that machine learning prospect. And I think they'll certainly get there with that, but I think there's a few more years of scale that's required to do that. And I think taking it from a different angle, when we think about trade digitization of documents across the broader ecosystem, so I think one topic that, again, Merker referred to was in relation to Melita, so the model law for transferable electronic records. And there's a big push in the industry to adopt those guidelines and to leverage technologies to support that. But for those, there's a need for registries to be aligned. There's a need for data and standards to be there, and that interoperability. So I think in that particular respect, it's about predominantly the standardization of the data and the interoperability between systems that will allow that data to be managed.
Thank you, Terry. I will bring Merker in as well, actually, on this sort of follow-up question, which has a very interesting, albeit more of a macro link to this. Has the combination of Brexit and COVID materially impacted the trade finance requirements of NatWest customers? Have there been any surprises or new corridors emerging? I guess I'll sort of prequel this a little bit for Merker and Terry, that there is an intrinsic link there, and that's actually both on the trade and the cash side, in terms of the obvious need and desire for digitisation, particularly where people just haven't been simply physically present, and therefore wetting documentation has been very, very challenging to obtain. So moving towards a form of digital technology has been absolutely necessary, particularly in amongst both a Brexit-related crisis and also a pandemic, where goods have needed to move, and they've needed to move cross-border, despite all of the challenges that we've had with both Brexit and also COVID itself. So perhaps I'll turn to Merker, if I may, just to pick up on that theme a little bit. I know they're very big macro questions here, but I guess just to talk a little bit more about how our client base has changed in terms of its need around trade, particularly around the supply chain side. So perhaps, Merker, I could turn to you, and then Terry to follow up with any other thoughts on that.
Sure. And as I say, let's start perhaps with the pandemic first, because that definitely shifted towards greater emphasis on electronic document exchanges. And one of the initiatives that we can say that was born as the result of it, and we definitely are using it, is document presentation between the banks. At least that we've managed to do with help, of course, from Terry from Swift. So it is a great way of showing how quickly we can adapt when we really push to adapt. And I think without pandemic, Terry, how long would it take us to mobilize it? How long do you think this initiative would really get into fruition? So, and it's a no-brainer, guys. Between the banks, I know there are lots of players in the trade transaction in the chain, but between the banks, of course, we should be doing it ages ago. So that is a great example when the pandemic accelerated things. Then the other one is interesting one is seeing what's happening in the market. The data flows, again, are interesting thing to look at. And I encourage everyone to look at Swift data. And Terry, I'm really happy you brought the topic around data, because whenever I want to know where I'm in the market and what's happening, what do I look at? Trade data flows from Swift. it tells me straight away, are we the outsider? Are we on the par with the market? And it's interesting because if you think about that, pandemic probably slowed things down a bit. So that's definitely the case. If I look at this spectrum of products we have in trade, and let's look at the funded side of things, let's look at supply chain finance. Well, that was definitely a massive increase in terms of utilization of existing programs. And a lot of our customers were really thinking, okay, this is about working capital, but also it's about longevity and liquidity of my entire ecosystem. I need to penetrate down the food chain in order to support even my smallest suppliers, because this is the hour of the need and I have to be able to. So this year we've seen an unprecedented level of new supplier onboarding activity, again, enabled with technology. Brexit, this one is interesting because we were expecting probably a bit more in terms of instruments as duty deferment bonds. But we can see that from the government interventions, when actually duty can be paid post the sale of the goods, which will come to an end quite soon, that has not yet materialized. We were really hoping to see greater use of all those instruments in trade that enable the contingent nature of the services we provide. As I said, duty deferment bonds is probably the best example. We're starting to see, and again, obviously it was compounded with pandemic, we start seeing customers exploring new markets. So again, we start seeing supply chains shifting towards Asia. We're seeing increased demand from our customers to be able to facilitate supply chain finance where their suppliers are in Asia, and we need to be able to onboard those suppliers. So that's for sure an interesting one. And we see UK corporates that are exploring different markets outside of EU. EU is still by far the biggest market. So this is not a strategy that can replace the trade with EU, absolutely not. But we're at least seeing a level of thinking. And again, data comes to play. Because if I am a manufacturer of certain type of goods, where are the trade flows of those goods across the world? Where should I go first? So we're seeing that very interesting dynamic as well.
Thank you, Mirka. Terry, anything you'd like to add on that?
Well, obviously it's nice to acknowledge that Swift was able to help during the pandemic with the ability to transfer documents through File Act. And I think the other interesting thing, and the point that Mirka alluded to, is that digitisation, I think, has been something that everybody's wanted to do, but nobody really had the appetite to do it. And certainly the pandemic was the kick that was required to really get these things going. Because when you think about MOLITA, so the Model Law for Electronic Transferable Records, that's actually been established in 2017. So it's been around for a few years. But it's only in the last couple of years that we've seen governments talking about it, the G7 looking to adopt it, obviously the UK Law Commission hoping that we can make that as part of UK law sometime in the spring of next year. So all of these things are positive, but it does take time. And unfortunately, that's just the way it has been. And, you know, even today, on reflection, there are still only 5 jurisdictions that have adopted MOLITA so far. So I think with the G7 in the UK, I think we'll see that'll be the snowball effect to get other jurisdiction up and running. But the true value of electronic bills of lading and other electronic documents of that nature, the value of it's only going to really occur when there's scale across the entire global ecosystem, supporting that from a legislative perspective.
Thank you, Terry and Mirka. This question's fantastic, actually, because it's really a mirror up to ourselves, both from an industry perspective and, I guess a developmental perspective as well. The question here is the market in sustainability-linked loans and bonds is huge, approaching approximately $1 trillion of issuances in 2021, according to Moody's. However, it feels like working capital products are further behind. Why is this, and what can we expect in the future? Really super question. Why don't I start off with Terry, sticking with you, and then ask Mirka to respond?
Actually, James, I think that's something that I would probably not the best person to respond to in this particular question, if you don't mind.
Mirka, why don't you pick up?
No problem. And it's an interesting one, and it's one actually that I was discussing with my management team literally last week. The answer is very simple, and it's one word. It's called greenwashing. So we have to be very careful. So when you think about loans and bonds, you can easily assess the purpose of that funding solution that we provide, and it's amortizing. And even then, you still have challenges in terms of greenwashing. Working capital is revolving. When we're financing working capital of our customers, it's revolving. So if we provide something that is linked to that revolving nature, you need to come up with a monitoring of it, that indeed, when you are providing sustainability finance, that sustainability finance really is there, i.e. the process that we provide are used alongside that purpose. And this is, of course, we trust the customers. Of course, we know it's true, but it's more about what the regulators require us to do. And they do require us to do more when we consider this type of new solutions, whether it's sustainability link or green loans, whichever category you're looking through the broad myriad of ESG instruments. So we have to do better in terms of in-life monitoring of that performance of our customers, how they're performing against their sustainability goals, and how are they using the proceeds on an ongoing basis. So we do meet those legal and regulatory requirements. But I would definitely say, again, we need technology. And how do I deliver consistent customer outcomes if different customers are using different benchmarks to decide how sustainable are they? So again, this is the topic that I've mentioned at the beginning of our podcast. It's really thinking about that common denominator. Because if I can't deliver a consistent benchmark for my customers, how am I delivering them consistent outcomes? And that is definitely something that we're working on as an institution, and we can see there is huge potential there.
Super, Mirka. Thank you very much indeed. Well, I can't believe it. 45 minutes or 44 minutes has rushed by incredibly quickly, and I'm keen both to respect your time, but also to ensure that we're close to the nomenclature that we've set ourselves, which is Banks 45. I guess first of all, it's important for me to thank Tim, Mirka, and Terry. Really super overviews. Thank you for the honest and open answers to the questions. There were more questions than we had time to deal with, so we will follow up on those accordingly. And an obvious statement here, I think, for any of our customers dialing in today, or indeed listening to the replay, please do feel free to follow up through your relationship contact to be able to answer any questions that you either think of subsequently or weren't answered today. We'd like to make sure that we do comprehensively answer those questions. I've really enjoyed the session. I hope that these short, sharp sessions have been useful. We've certainly really enjoyed putting them together. As ever, it's all about your feedback. It's about you letting us know how useful they are. So we'd be very, very grateful to hear your feedback. Yes, it's the last one of the year. We want to give both our speakers and yourselves certainly some respite through to the holiday celebrations and into the new year. We will recommence them in some way, shape or form, and we'll be coming out to you soon to let you know exactly how that will look and what the sort of subject matter will be. But again, as I say, these will be very much informed by your feedback and your desire to hear on the subjects and indeed experts that we can bring to the table going forward. So I guess that leaves me with a very simple last, sum up here, which is to wish you and your families and your friends and your loved ones a fantastic holiday period. I know it's only the 7th, but it will rush by obviously very, very quickly until that time. And above all, a huge thank you. Thank you for continuing to support us, for continuing to work with us, to be open and honest and candid with us, for continuing to entrust us with your business. And we recognise with particularly our banks clients, that's very much a two-way street. That balance of trade is really, really important to strike. And we hope we've got that right throughout the year. We're really excited about next year. Will it be different to this year? Who knows? But one way or another, the basis of this business is built entirely on our clients. So we're just so delighted that you've had a chance to dial in today. Thank you for spending the time with us. Thank you for your business. And once again, have a really, really happy and restful period when you finally get to it. Very good evening to you all. Thank you.